The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
The growth and income radar has been flashing signals for a bank stock that Todd Bunton, our growth and income strategist, wants to tell you more about. You monitor that growth and income radar. This is a bank company that has been around since the 1800s.
Yeah, they trace their roots all the way back to 1868.
Yeah.
Spring Bancorp, SASR is a ticker symbol. They have about 44 branches in mostly the Washington, D.C. suburbs of southern Maryland and northern Virginia. Very solid, stable market. Their housing market's been booming. And like a lot of banks, Sandy Spring has been growing their loan portfolio while also seeing improving credit quality metrics. So that's really good for banks' bottom lines and has helped the company to deliver very solid earnings beats, which has prompted analysts to raise their estimates, which I'll talk about in a little bit. But if you look at their loan portfolio, about half of their loans are in commercial real estate. They do have about 27% in residential real estate, so they are making mortgages as well. But as you can see here, earnings estimates have been rising over the last few weeks. This was prompted by a solid beat on April 16th, and analysts unanimously raised their estimates, and the magnitude of those increases was pretty solid, strong enough to send the stock to a Zacks Rank of 2, which is a buy rating. So very good on earnings momentum here. If you look at earnings growth projections over the next couple of years, analysts are expecting about 19% earnings growth this year and 4% growth next year. Now again, that's predicated on an improving economy and improving housing market because, as we know, these banks are heavily tied to both of those factors. But there's one positive catalyst that I don't think is being factored in here, and that's the possibility of rising long-term interest rates. So banks, as you know, they pay out deposits more on the short end of the yield curve, and they take in interest income from loans, which are usually tied to longer-term interest rates.
Right.
So I tell investors to keep an eye on that 10-year Treasury note. If that continues to rise, that's really good news for these banks, at least in relation to short-term interest rates. So that yield curve, as it steepens, means basically wider profit margins for banks. So that's all good stuff. And if you look, they're very solid on the income side as well. They pay a dividend that yields 3.4%.
That's pretty aggressive.
Yeah, that's pretty solid for a small cap bank like these guys. They did slash their dividend during the Great Recession like a lot of banks, but since 2011 they've been aggressively increasing that. If you look at their payout ratio, which is the percentage of dividends to net income, it's about 49%. That tells me they have plenty of room to continue increasing their dividends, especially considering they have a well-capitalized balance sheet. So good on the income side, good on the earnings momentum side, and very reasonable valuation too. I brought with me a peer comparison chart with other banks, other small cap banks within the area, within the Mid-Atlantic region, and you can see they trade at just 1.5 times tangible book value, very reasonable there. And you can see Sandy Spring has that unique blend of solid earnings momentum, very good income, and all at a reasonable price. And yeah, some other banks do pay a good dividend, but they tend to be pricier. They don't have the income metrics. This has all three, the kind of the trifecta right here. So I expect solid total return potential from this bank over the remainder of 2015.
Okay, do you own it?
I do not.
All right, check out other stock picks and stock picking strategies at our website, Zacks.com. Link to all of that information, stock commentary as well, right off the home page with Todd. I'm Terry Ruffalo.